The stock market, a roller coaster that builds wealth, but also a ride that can turn your stomach upside down. Every news channel is asking, is the market about to crash? Let me ask you this, what would you do if it did? Would you panic and sell, or seize the moment to make the best decision of your life? Before you answer, let's take a trip back to 2008. The market nosedived by over 50%, wiping out wealth in what felt like the blink of an eye. Fear gripped everyone, but here's the twist, within just a decade, the market didn't just recover, it more than tripled. Market crashes aren't the apocalypse they seem, they're more like a reset button, offering a fresh slate of opportunities. Still worried? Let's break this down logically, emotionally, and strategically. By the end of this video, you'll know exactly what to do, whether a crash happens or not. But here's the twist, is a crash even coming? Or is this fear a smokescreen hiding your real opportunity? First, let's look at the facts. The stock market dips about 15 to 20% every decade. It's as natural as winter coming after fall. And here's the kicker, even with small drops recently, we're still well above historical averages. Sure, headlines love drama, market crash incoming, sells way better than slight dip ahead. And yes, inflation, interest rates, and geopolitical tensions are real concerns. But think about this, are these signs of a catastrophic collapse, or just the usual bumps in a healthy economy? Let me ask you another question, if someone told you a sale was coming at your favorite store, would you panic, or would you get excited? Now replace store with stock market. Makes you think, right? Because last time I checked, Warren Buffett wasn't screaming, sell everything, from his mansion. Now you might be wondering, if small dips are normal, what happens next? Let's zoom out further. 2008 was scary, no doubt. Lehman Brothers collapsed, housing markets imploded, and portfolios were obliterated. But here's what most people miss, the people who stayed invested, or better yet, invested more, came out wealthier on the other side. Why? Because markets recover. The S&P 500 has averaged a 10% annual return for nearly a century. Fear might trigger a sell-off, but recovery is powered by something much stronger, human innovation and growth. So, let me ask you, what side of history do you want to be on? The side that panics and locks in losses, or the side that buys assets on sale and grows wealthy as the market rebounds? Which brings us to the real question, how do you turn uncertainty into a wealth-building moment? Here's the game plan. Step 1, keep cash handy. Market drops mean buying opportunities, whether it's stocks, ETFs, or even index funds. Step 2, think long-term. Wealth isn't built in a month, it's built over decades. And step 3, diversify. Don't put all your eggs in one basket. If stocks dip, other investments, like bonds or real estate, can cushion the blow. But most importantly, don't let fear paralyze you. History shows that the stock market rewards patience, not panic. So next time you hear crash, don't think disaster. Think discount. The only thing standing between you and financial freedom is how you choose to act. And hey, if all else fails, you could always invent the next iPhone. Easy, right? Now, I want you to imagine this, it's 10 years from now. You're looking at your investment portfolio, proud that you didn't let fear win. That you took action. The question isn't, is a crash coming? The question is, are you ready to?